Absolutely massive news in the crypto world today. Bitcoin just smashed through its first ever six-figure monthly close at $102,000, and Picoin is exploding 10% higher despite a major deadline change. The next few weeks could change everything. You're going to want to hear this. What's up, Gold Rush family? Welcome to Gold Rush Crypto Daily, where we break down the biggest moves in crypto. Today, we've got two explosive stories that could impact your portfolio in a major way. If you're new here, smash that subscribe button, ring that notification bell, and give this video a thumbs up. Join our awesome community, and let's ride these crypto waves to the top. Now, before we dive into the juicy details, let's take a quick look at the overall market. As of today, February 1st, Bitcoin is trading around $102,000. After that historic monthly close we'll talk about later. Ethereum's sitting pretty at $3,200. Solana is chilling near $227, and Cardano is hovering around 92 cents. It's a dynamic market, folks, full of surprises, which is exactly what we'll be unpacking today. All right, let's get into the first bombshell of the day. We're talking about Pi Network, and we've got a head-scratcher of an article from Coinpedia titled, Picoin surges 10% despite KYC delay. Is $100 in sight before Mainnet launch? Now, this is where things get weird. The article starts with, here we go again. Pi Network has once again made a last-minute decision to extend its KYC, Know Your Customer, verification, and Mainnet migration deadline. This time to February 28, 2025. Yes, you heard that right. Another delay, folks. Just one day before the originally planned January 31st deadline, they pushed it back. This is the third extension. But here's the kicker. Despite the delay, Picoin has still managed to surge by 10% in just 24 hours. What? How does a Mainnet delay cause a price pump? It's like the crypto market is playing by its own rules. This is very strange, but not unheard of. The article dives into the reasons behind this extension. Pi Network explained in a blog post that the grace period for KYC updates and migration has been extended to February 28th to ensure fairness. They want to give everyone more time to complete their verification without losing their Pi coins. This is to help ensure that everyone can claim their coins. Now, they're trying to reassure everyone that the extension won't affect the launch of the open network, which is still scheduled for Q1 of 2025. They made it clear that the new deadline won't change the timeline for the launch. So, they're saying everything is still on track, despite the delay. They want to make it clear that these two things are separate. But here's the kicker, folks. Anyone who doesn't complete the KYC process and migration by the new deadline will lose their coins. Ouch, that's harsh. Only Pi mined within the last 6 months before migration will be kept. Older balances will be lost. This is not good. So, they're giving you more time, but the clock is ticking. You need to act fast to secure their holdings. Now, let's talk about this price surge. The article states that in just 24 hours, Picoin's price increased by 10%, reaching nearly $50, with a market cap of $3.38 billion. This is according to unofficial sources, of course, since Pi isn't officially traded. This is a big jump. As the Mainnet launch nears, Picoin traders are closely monitoring key price levels. The article suggests that if the Mainnet launch occurs before the end of Q1, there's potential for Picoin to hit $100. $100, people. That's a bold prediction. However, if delayed, it may see a bearish decline towards $28. This would not be good for the coin. Now, here's my take on this whole situation. This delay is definitely a mixed bag. On the one hand, it's good that they're giving people more time to complete KYC. But on the other hand, it raises concerns about the project's ability to meet deadlines. This is not a good look for them. And that price pump? It's intriguing, but I'm not entirely sure what's driving it. Maybe it's just speculation. Maybe it's some insider information we don't know about. Or maybe, just maybe, the market sees this delay as a sign that the Pi Network team is taking the time to do things right. This could be a good thing. But that's just one piece of the puzzle, folks. We've got another article that throws a whole different kind of fuel on the fire. This one, from Cointelegraph, is all about Bitcoin, and it's titled, Bitcoin Seals First $100,000 Plus Monthly Close with BTC Price Due, Big Move. Let's see how this ties into the bigger picture. The article starts with a bang. Bitcoin made history after BTC/USD achieved its first six-digit monthly close ever. That's right, folks. Bitcoin closed above $100,000 on Bitstamp on January 31st. This is a major milestone. Now, the article does mention that this came despite a last-minute BTC price drop due to macroeconomic volatility. It also notes that U.S. stocks ended the day down, while sentiment suffered. This shows that Bitcoin is still susceptible to market forces. But here's the key point. Market commentators saw little reason for bearish posturing. One analyst, Axel Kabar, wrote, "At every 1% correction, panic and crash forecasts is not characteristics of a market top." He believes that a market top is accompanied by euphoria, disbelief in even a short-term correction. This suggests that we are nowhere near a market top. Another expert, Michael Van de Poppy, said, "I shouldn't worry about this news. Ultimately, it will lead to higher crypto prices anyways." This is a very bullish outlook. And then we have the infamous Plan B, who added a red color dot to the BTC/USD chart based on his stock-to-flow model. According to the article, this signals the most intense phase of the BTC price cycle was underway. This suggests that Bitcoin could be about to explode. Now, here's where things get really interesting. The article states that BTC/USD ended January up 9.3%, but February is historically one of Bitcoin's best-performing months, with average gains of 14.4%. If we see a repeat of that, the article suggests the next monthly close could be around $117,000. That's a massive increase, folks. Fedor Matveev, founder of CryptoRank, wrote, "If history is any indication, Bitcoin might be gearing up for a big move." He also pointed out that every previous post-halving February saw major upside. Another trader, Rect Capital, noted that 8 out of the past 12 Februaries dating back to 2013 have produced double-digit upside. And a post earlier in the week agreed that post-halving years produce strong February price performance. It highlighted gains of 61%, 23%, and 36% in 2013, 2017, and 2021, respectively. Now, here's my take on this Bitcoin prediction. The historical data is definitely compelling. February has been a very good month for Bitcoin, especially in post-halving years. And with the stock-to-flow model signaling a major bull run, it's hard not to be excited. But remember, past performance is not indicative of future results. This is crypto, folks. Anything can happen. While I'm optimistic about Bitcoin's potential, it's important to stay grounded and not get carried away by the hype. It is important to be cautious. So, how do these two articles connect? Well, it's all about the bigger picture of the crypto market. While Pi Network is dealing with its own internal issues and delays, the broader market, led by Bitcoin, seems to be gearing up for a potentially massive move. If Bitcoin does explode in February, as some analysts predict, it could lift the entire crypto market, including altcoins like Picoin. A rising tide lifts all boats, as they say. If Bitcoin does well, it could create a favorable environment for Pi. But here's the crucial point. Pi Network needs to get its act together. They need to deliver on their promises, launch the Mainnet, and build a utility for Picoin. Otherwise, they risk missing out on the potential bull run and getting left behind. They need to make sure they meet their deadlines. The extension of the KYC deadline could be a sign that they're taking the time to do things right. Or it could be a sign of deeper problems. Only time will tell. So, what's the bottom line? The crypto market is full of surprises, folks. Pi Network's delay is a curveball, but the price pump is a head-scratcher. And Bitcoin's potential February surge could shake things up even more. What do you think? Is Pi Network on the right track? Will Bitcoin break records in February? Let me know your thoughts in the comments below. And before you go, make sure to smash that like button, subscribe to the channel for more expert crypto analysis, ring that notification bell so you never miss an update, and share this video with your fellow crypto enthusiasts. Check out my other videos, you will gain a lot of knowledge from them. This is Gold Rush, signing off. Stay safe, stay informed, and I'll see you in the next video. Disclaimer. Remember, this is not financial advice. I'm just a guy on the internet sharing his opinions. Always do your own research before making any investment decisions.